Welcome to the second of 7 recorded webinars in the Financial Management Series for the Child and Adult Care Food Program, or CACFP. These trainings are designed to provide new and existing CACFP sponsors with detailed information on the financial requirements associated with participating in the CACFP. The Financial Management Series is intended to be viewed in order as we will be referencing and building upon concepts touched on in preceding presentations. In this presentation, we will provide you with an overview of the financial management concepts we will discuss throughout this presentation and the remainder of the series, and we will discuss basic accounting concepts to assist you in setting up an accounting system that complies with CACFP requirements. We understand that regulations and guidance regarding CACFP financial management can be overwhelming and complex. Here we've provided a high-level checklist of the key items to consider to ensure that your systems, processes, and procedures meet federal regulation. Throughout the CACFP Financial Management Series, we will go through all these items in detail and in some instances multiple times. The goal of these trainings is to provide you with the information and resources necessary to successfully manage all of the financial aspects of the program. If you've already watched the first presentation, this slide will look familiar and will serve as a review. You will see this slide in every presentation, and it will help to really drive home the concepts of what we will be discussing. We went over the first bullet in the first training, performance standards. This presentation will be focusing on the second bullet, a CACFP compliant accounting system. On this slide, we have provided a visual flow of the key items and processes we will cover. All of the bullets from the previous slide fit into one of these sections. As mentioned on the previous slide, together these trainings will give you a solid foundation for managing the financial aspects of the CACFP in accordance with federal regulation. This training will cover the accounting system. Before we talk about the accounting system you must have in place to meet CACFP requirements, let's define what accounting is. Accounting is the process of measuring, interpreting, and communicating financial information to support internal and external business decision-making. Accounting is important because it tracks revenue and expenses, ensures compliance with regulations, and provides useful information on how the business is performing. Accurate accounting records are crucial, however, because you're limited by the quality of your input. If your accounting data is full of errors and inaccuracies, your financial statements will in turn be incorrect, and you will not have a clear, accurate picture of how your business is doing and may make flawed decisions based on flawed information. First, let's talk about the different accounting methods that can be utilized. The two most common methods of accounting are cash accounting and accrual accounting. In cash basis accounting, income is recognized when cash is received, and an expense is recorded when the expense or bill is paid. The triggering event is when cash changes hands. Cash accounting is a simpler accounting method to employ because you're only concerned with if cash was received or paid when determining when a transaction has occurred or needs to be recorded. In accrual basis accounting, income is recognized when earned and expenses are recorded when incurred. Unlike cash basis accounting, you do not factor in when cash was received or paid. Typically, income is earned when a service is provided or a product is delivered. Expenses are typically incurred when a product or service is received. Accrual accounting follows the matching principle, which requires an organization to report expenses in the period in which the related revenues are earned. Next, let's go over a simple example to highlight the timing differences in recording a transaction under cash and accrual accounting. Let's say you receive a utility bill for utilities used or received in the month of March and pay this bill in April. Under cash accounting, you record the expense in April as this is when the cash goes out the door. Under accrual accounting, you record the transaction in March as that's the period where you used or incurred the utilities. Let's walk through another simple example, but this time for revenue. Let's say a child care center provided child care services for the month of May and received the parents' payment in June. Under cash accounting, this would be recorded in the month of June, as that's when the cash changed hands. Under accrual accounting, this would be recorded in May, as that's when the income was earned. In other words, when the child care services were provided. Over the next few slides, we will be defining a few key accounting terms. Journal entry. A journal entry is used to record a business transaction and the accounting records of a business. It's recorded in a ledger, includes a debit and a credit. A ledger is a book containing accounts. The general ledger summarizes all transactions occurring within the entity. The general ledger is used to create financial statements, which include a balance sheet, income statement, statement of cash flows, and a statement of owner's equity. A trial balance is a summary of all the general ledger accounts and balances at a point in time. A chart of accounts is a listing of the accounts available in the accounting system in which to record entries. The chart of accounts consists of balance sheet accounts, such as assets, liabilities, stockholders' equity, and income statement accounts, such as revenue, expenses, gains, and losses. Continuing on with some key accounting terms. An asset is a resource with economic value owned or controlled by an organization or individual that will provide future economic value. Examples of assets include cash, accounts receivable, which is money that is owed to you, and land that is owned. A liability is a financial obligation of a company that represents a future detriment. For example, if you take out a loan, that is a liability as it represents future outlays that will be required. Fiscal year, an accounting year that ends on a date other than December 31st. For example, the federal fiscal year runs from October 1st to September 30th of every year. Or a school district may have a fiscal year that runs from July 1st to June 30th. As a reminder, the CACFP operates on the federal fiscal year, which is 10/1 to 9/30. The CACFP budget will be based on the federal fiscal year. Keep this in mind if you are on a calendar year or a different fiscal year. GAAP, Generally Accepted Accounting Principles. These are general guidelines and principles, standards, and detailed rules, plus industry practices that exist for financial reporting. On this slide, we have a very simplified, high-level version of the accounting cycle. The accounting cycle begins when a transaction occurs and ends when this transaction is included in the financial statements. The financial statements are the end product of the accounting cycle, and it is critical that all the appropriate steps are taken to ensure that the financial statements are accurate. Accurate financial statements are extremely important in the CACFP, as these are used to assess the organization's financial viability, which we would discuss in the performance standard training. The first step in the accounting cycle is when a transaction occurs. Receipts, invoices, and other source documents related to each transaction are assembled to support an entry that will be made in the accounting records. Source documents are key to ensuring accurate accounting records are maintained and will be required to support CACFP revenue and expenses. Transactions are recorded in chronological order via journal entries. As we discussed a few slides back, the timing of when a transaction is recorded will be dependent on if it's cash or accrual basis. Next, the journal entries are posted to individual accounts kept in the general ledger. For example, all entries involving cash are brought together in the ledger's cash account, and similarly, all entries involving sales are recorded in the ledger's sales accounts. Finally, all accounts in the ledger are summarized at the end of the accounting period, and a trial balance and financial statements are prepared from these account summaries. At the time the books are closed, there will also likely be adjusting journal entries that are made. Next, let's give a brief overview of the financial statements. The balance sheet summarizes the assets, liabilities, and owner's equity at a point in time. It's like a snapshot as of the closing date. On a balance sheet, total assets must equal liabilities plus owner's equity. The income statement shows revenue, expenses, and profit over a period of time. You may also hear this referred to as the P&L, profit and loss statement. The statement of owner's equity summarizes the changes in the equity section of the balance sheet. The statement of cash flows is a statement that summarizes an organization's sources and uses of cash by operating activities, financing activities, and investment activities. Note, the above financial statements that I just referenced are for for-profit entities. Nonprofit entities are required to produce slightly different financial statements. For example, instead of a balance sheet, nonprofits prepare a statement of financial position, and instead of an income statement, a statement of activities is prepared. To summarize, the purpose of accounting is to summarize financial data in order to provide useful information to stakeholders and decision makers. The financial statements are the ultimate end product of the accounting cycle.
Now that we've given a brief overview of accounting in general, we will go over the requirements of accounting for CACFP income and expenses. Per regulation, an institution or sponsor operating the CACFP must have financial management systems, including records, in place that document compliance with federal statutes, regulations, and the terms and conditions of the program. These systems must be sufficient to allow for the preparation of reports and for the tracking of all revenues and expenditures. We'd like to remind you of what we talked about in one of the earlier slides. It's crucial that your accounting records are accurate and reliable, as this is necessary in order to be compliant with federal regulations. Now we are going to go over accounting system requirements. At a minimum, your accounting system must allow your agency to separately track CACFP income and expenses. The CACFP is a federally funded program, and these funds are restricted. CACFP income can only be used for allowable CACFP expenses. Your accounting system must allow you to separately track the income and expenses so that you can demonstrate that these funds are being managed in accordance with regulation. As discussed within the performance standard training, you will need to document within your management plan how you separately track CACFP income and expenses. Additionally, your accounting system must be able to generate financial records, including general ledgers, check registers, profit and loss statements, balance sheets. You must be able to document through your accounting system that you are using CACFP income only for allowable CACFP expenses. For example, let's say you use CACFP funds to purchase food from a grocery store and that this was included in your approved CACFP budget. You must be able to show where this is recorded in your general ledger. Additionally, profit and loss statements and balance sheets are critical in documenting financial viability, which we discussed in the first section of this series. Lastly, your accounting system must be in accordance with the U.S. generally accepted accounting principles, and you must either be on a cash or accrual basis of accounting. On this slide, we'd like to suggest different methods to separately track your CACFP revenue, income, and balance. This is not an all-inclusive list. You may choose another method as long as it allows you to separately identify the income and expenses and track if you have a surplus or deficit in your CACFP nonprofit food service account. Ideally, your accounting software has the functionality to allow you to separately track your CACFP income, expenses, and balance from other agency revenue and costs. As compared to other methods we'll go over, such as a separate checking account or an Excel-based general ledger, tracking your CACFP revenue and expenses directly within the accounting software reduces the amount of possible errors and you won't be doing double work. Few items I'd like to note here. Your chart of accounts should have accounts established that allow you to track CACFP specific costs that would not necessarily apply to the overall organization. Your accounts should align to the CACFP budget, but at a minimum, the categories should be food, kitchen supplies, non-food, food vendor costs if applicable. You may decide to create a specific CACFP revenue account. However, this is not required if you assign CACFP its own specific code, as in the next example. So you could assign accounting codes to CACFP revenue and costs, such as in the example on this slide. In this example, we're assigning code O2 to the CACFP program. There are additional codes to further identify specific classification and expenses. So for example, employee costs are 010, professional employee 200. Note, your organization can use whatever codes and descriptions that best fit your needs as long as it allows you to separately track CACFP revenue and expenses. And there are numerous accounting systems out there, and they're all set up differently. So whatever configuration works to allow you to do that is acceptable. You could also maintain a completely separate fund or ledger within your accounting system to track CACFP. However you choose to set it up within your accounting system, you must have the functionality to run reports that show the CACFP deficit and surplus. Additionally, it should be detailed enough to show the CACFP costs by line item, and RIDE must be able to tie the costs back to source documentation and to line items included in your RIDE approved budget. We also want to highlight that you can, but not required to, maintain a separate checking account for CACFP purposes. If you are using a separate CACFP bank account to demonstrate the operation of a nonprofit food service, all program revenues and transactions and all approved and allowable expense transactions must occur in this bank account, and the account balance must reflect your CACFP surplus and deficit. Any transfers that come from the designated program account must be easily tracked back to the program account and must be clearly noted in journal entries and accounting ledgers. If you have allocated budgeted line items within your budget, such as payroll, you must transfer the expense at least on a monthly basis. The transfer will need to be able to be tied back to your accounting system. Lastly, you can use an Excel-based ledger to track CACFP revenue and costs. RIDE has created a template that you can use, which we will go over later in this training. An additional caveat: even if you choose to use an Excel-based ledger, the line items will still need to be able to be tied back to your general ledger within your accounting system and source documentation. If you are unable to track CACFP revenue and expenses directly within your existing accounting system, you can utilize the RIDE Excel-based general ledger template, which is snapshotted on this slide. The template has a separate tab for each month in the fiscal year and will automatically calculate based on the detailed transactions entered if you have a CACFP surplus that exists when CACFP revenue is greater than expenses, or a CACFP deficit, which occurs when CACFP revenue is less than expenses. Please note that any CACFP surplus can only be used for allowable CACFP costs. Also, a CACFP deficit must be covered by another source of funds, such as the general fund. And you would look at this at the end of the fiscal year. So you can carry a deficit throughout the fiscal year, but if at the end of the fiscal year you are at a deficit, that is when it would need to be covered by another source of funds. The CACFP General Ledger covers the months in a fiscal year, October to September, so that's the federal fiscal year. And it also includes a summary tab that summarizes the activity by month. Some overall use notes on the use of this template. You enter entries at the transaction level, not the aggregate level. So for example, let's say you have 4 food purchases in a month with 4 separate receipts. There must be a separate entry for each food receipt, and the total must equal the source document. Do not add all the food purchases for the month together in one line. The ledger can only include CACFP allowable costs that have received prior approval through the budgeting process. The allocation percentages must be consistent with previously approved CACFP budget. This template should be prepared to the best of your ability on an accrual basis. The revenue should be entered based on the month the meal reimbursement was earned, regardless of when cash is received. Similarly, the expenses should be included in the period which the related revenues are earned. Over the next few slides, we'll be entering transactions for the month of October. First, the revenue should reflect the October claim, regardless of when the reimbursement is received. Similarly, the expenses should reflect those incurred in the month of October. This means payroll for work performed in October, food used in October, utilities consumed in October, lease expense for the month of October, etc., regardless of when the cash actually changes hands. This provides the most accurate picture of how CACFP reimbursements are being used over the course of the federal fiscal year and results in the most accurate depiction of CACFP surplus and deficit. Over the next few slides, we'll go over how to enter sample data and transactions into this template. I'd like to take another pause and talk about the federal fiscal year. So your organization may be on a calendar year, it may be on a different fiscal year, but CACFP revenue and expenses need to be tracked based on the federal fiscal year. On this slide, we will go over how to complete the top portion of the ledger worksheet. Enter the sponsor name in the first cell. For this example, it's XYZ Child Care Center. Enter the claim month. We are using October for this example. Note, the tabs are broken out into months, and the month entered here should correspond to the month name on the tab. Program year. As a reminder, this is set up based on the federal fiscal year, which runs from October to September. The program year should be the same throughout the different tabs, which is fiscal year 2021 for this example. Surplus from previous year, if applicable. As October is the first month of the federal fiscal year, you would enter in any CACFP surplus from the previous year in the cell. Please do not enter any deficits. You cannot carry forward a deficit into the next fiscal year and must cover the deficit with non-federal funds. For the months of November through September, this cell is not an entry field. The formula is linked to carry forward the previous month's surplus or deficit. For the purposes of this example, we did not have a CACFP surplus. Enter the monthly CACFP reimbursement entered into monthly CACFP reimbursement earned cell. This should reflect the reimbursement owed for the month regardless of when cash is received. For today's examples, the month of October is what we're using. So we're going to enter the claim for the month of October, even though we don't receive the cash reimbursement until a later month. For this example, that's $6,000. Similarly, the expenses that will be entered are for expenses incurred for the month of October, regardless of when they are paid. And we're going to go over a few examples to illustrate this. Lastly, do not enter any amounts in the two grayed out cells. This is monthly food program expenses, which will automatically populate based on the entries in the CACFP General Ledger. Additionally, any CACFP surplus or deficit will also auto-calculate. On this slide, we have an example of how to enter in a food and non-food supply purchase. Note, we've hidden some columns within the worksheet to show only the applicable columns for this example. For purposes of this example, let's say you went to Stop and Shop, purchase food, CACFP non-food supplies, and some other non-reimbursable food items. Enter the date per the receipt and a brief description. Enter the CACFP allocation percentage, which must tie back to your budget. For this example, food and non-food supplies are 100% CACFP. Enter the method of payment and the name of payee. So we paid with a credit card and the name of payee is Stop and Shop. Enter the total amount of the receipt, which is $2,000 for this example. This is an important piece. You must enter the total amount that ties back to your source document, the receipt. We will use the other columns within this ledger to break out the type of budgeted cost it is and indicate which amounts are non-CACFP. During your regularly scheduled review, RIDE staff will tie the line items back to the receipt. So of this total $2,000 amount, $1,750 relates to CACFP food purchases, and $100 are related to CACFP non-food kitchen supplies. Additionally, there is $150 of non-reimbursable food item purchases. Note, these non-CACFP costs must be highlighted on the receipt. Additionally, it also needs to be easily segregated between what was food and what was non-food. This is all should be easily identifiable within the source document. On this slide, we have an example of how to enter payroll costs. Again, we've hidden some columns within the worksheet to show only the applicable columns for this example. Payroll costs must be entered by pay period and must tie back to a source document, example, payroll registers. Payroll should include a different line item for each employee included in the budget by pay period. The allocation percentages must tie back to the budget, and only employees and positions included in the budget can be entered in the general ledger. Otherwise, it's an unallowable cost. The only time that it is permissible for the allocation percentage to differ is if you are using time and effort and the allocation percentage ties back to the time and effort and it's not materially different from what was budgeted. In our example, we're completing the ledger for the month of October. Payroll should reflect employee work performed in the month of October regardless of when it was paid. For example, some work performed in September may not be paid until October. That pay period would be included in the previous year's general ledger in the month of September. Similarly, work performed in the last pay period of October may be paid in November, but should be reflected in the October's general ledger. In this example, it's work for the period of 10/1 to 10/15. The CACFP allocation percentage per the budget is 25% and assume this position is operating labor. The total amount of the reflects the gross pay and earnings per the payroll register. The allocation percentage of 25% is multiplied by the total gross pay of $1,000 to arrive at the CACFP food service operating labor amount of $250. The remaining $750 is entered in other non-CACFP labor, and a description of non-CACFP job duties is entered in the Specify Other column. On this slide, we have an example of how to enter a utility bill. Again, we've hidden some columns within the worksheet to show only the applicable columns for this example. As this example is for the month of October, the utilities entered in this tab should reflect utilities consumed in the month of October, regardless of the bill date and the date on which the bill is actually paid. You'll see in this example that in the description, this is gas for the period from 10/1/21 to 10/31/21. Next, the CACFP allocation percentage is 5%, and this is based on the approved budget. The percentage of 5% is multiplied by the total bill amount of $200 to arrive at a CACFP allocated amount of $10. The remaining amount is $190, and this is included in the other non-CACFP, and we enter in a description and specify other column. This concludes our overview of examples on how to use the CACFP Excel-based general ledger as a mechanism to separately track CACFP revenue and expenses. As a reminder, source documents are key supporting documentation for the ledger, as well as any other tracking method. Each line item must tie back to a source document, and RIDE must be able to tie the total transactions back to your accounting system. Also included within the CACFP General Ledger is the Summary tab, which summarizes the totals of CACFP reimbursement and all of the expense categories. This is not representative of a full month's activity, only a summary of the 3 examples we went over in this presentation. The Summary tab will also calculate the monthly CACFP surplus and deficit and the surplus and deficit for the fiscal year. I'd like to note that for the months of November through September, the previous month's surplus and deficit is automatically carried forward via formula. So we just went through a lot of accounting requirements, and you may be asking yourselves, why are there so many rules surrounding financial management of the CACFP? As a reminder, CACFP is a federally funded program, and these funds must be safeguarded. It is the sponsor and RIDE's responsibility to ensure that funds are not mismanaged or improperly used. Having a compliant financial system will allow RIDE to verify that all program funds have been used according to all the federal statutes, regulations, and the terms and conditions of the federal award. Lastly, CACFP is a voluntary program. By agreeing to participate, sponsors accept administrative and financial responsibility for the operation of the program according to federal and state laws, regulations, and policies. Now we'd like to recap on the key concepts we learned in the accounting system section of the financial management series. In order to be in compliance with federal regulations concerning the CACFP, you Must have an accounting system that is in accordance with U.S. GAAP and can produce accurate financial information. You must have a way to separately track CACFP revenue and expenses. Some examples we went over include assigning CACFP program codes, creating CACFP specific accounts in the chart of accounts, opening a separate CACFP specific checking account, or using the RISE CACFP ledger. Finally, you must be able to produce accounting records that document that CACFP funds were used properly and in line with regulation. This concludes the second session in the CACFP Financial Management Series, Accounting System. Please visit the RIDE website for the remaining 6 sessions in this series. To access any templates or forms referenced during this training, please visit the RIDE Child Nutrition Program's website at the link found on the screen. If you have any questions related to this training or other CACFP topics, please contact your RIDE program specialist or email our General Child Nutrition inbox at the email address found on the screen.